order. This is the Board of Directors meeting of Marin Municipal Water District, June 18th. First order of business is to adopt the agenda.
Motion to adopt the agenda.
Is there a second? All in favor?
Aye.
Aye. Opposed? None opposed. Public expression. Anybody who wants to talk about an item that's not on the agenda, please come forward now.
Amy Willard from the Coalition of Sensible Taxpayers. I have my video camera again. And just want to remind you that constituents have repeatedly asked that you video all the meetings. There's a lot of public unhappiness about this, and inexplicably so far this has not gotten on the agenda, so I hope you will fix that. So you have been recording audio, but it's not possible to know who's speaking, who's in the room, to see the PowerPoints. So I hope that you will change this, but if you don't care about public opinion, then maybe consider the fact that video serves in the district's own interests. Without it, you don't have a credible record, which is required by law. So on a related note, I hope that before you approve your May 14th meetings, that, and I think you've already approved the ones of the meeting before that, but in any event, I hope that they will be revised so that you capture public comment in a meaningful way. The last two board meetings have had simply the notation 4 people spoke during public comment. This is a new approach. It's a big step backwards from what was then minimal transparency. And you were doing somewhat better at this up until and through your April 2nd meeting. I encourage that you take a look at the Transportation Authority of Marin, what they do in terms of their minutes. It's quite extensive in terms of their notations about public comment. You can actually figure out what happened. Also not captured in the minutes are my comments on May 14th about the CIP and the CMF, including an exchange with the directors confirming that the final CIP had not yet been approved by the board. So I ask that you amend the minutes accordingly before you approve them. And then finally, I have here for you a second letter of objection from Cost Lawyer. I hope that you will put also in the minutes that I have presented it to you. And it's pretty self-explanatory, but basically says that we believe that you've gone down the wrong path in creating fees and a flawed after the fact CIP that doesn't work sufficiently to support the fees. So we urge you once again to reconsider, go back to the start and do it right. So I will give this to Stephanie and you can distribute it as you choose better. Thank you.
Okay, thanks, Mimi. Anybody else for open time? Okay, seeing none, we'll go to the consent calendar, and first items are the minutes.
No, you got the directors and managers.
Oh, I'm sorry. You're right. Okay. Next item is directors and general managers announcements. Sorry about that. Starting with
Sure. Well, I attended the American Water Works meeting in Denver last week. I strongly encourage our staff to consider going to that convention. Next one's in Orlando. It's quite an amazing convention. 25,000 water folks are there. Basically everybody that's anybody in the water business in Denver. And it was a very informative meeting. They're getting closer and closer to the Water Environment Federation in their agendas, in the sense of reclaimed water and recycling is taking a bigger and bigger role in what's going on. But everybody's basically facing the same issues we're facing: water supply and equitable rates and affordability and those kind of things.
Okay.
On last Thursday, I attended the first day of a 2-day workshop on landscape scale networks and sustainability, and one of the featured projects was 110. And what's happened is in the last few years, there have been several similar projects that have begun around California. And so what's happened is that there's now sort of a coalition that's forming, and it literally is a network of networks. And so everybody's talking about how do you start looking actually at watersheds and connecting all the bodies within that watershed, from the
source down to groundwater basins. And what do those models look like? And the keynote speaker was supposed to, or the welcoming comments were supposed to be Wade Crowfoot, who's the Secretary of Resources for the state. But he got called back to Washington, D.C. to testify before the Senate about wildfire danger and the level of investment that's needed in places like where we live. And he sent in his place his deputy secretary, and she was astonishing and really did an incredible presentation. But what she talked about was Wade's Crowfoot interest in literally looking at landscape scale models. And also, he mentioned One Town as a model for ways of getting collaboration among just different groups. So it was actually pretty amazing to be a part of that group. And
What is the landscape scale model? What does that mean?
it means you have, well, in the case of One Tam, you can think of Mount Tam as a landscape with 4 agencies that have different parts of it that they're trying to manage. And you know, the gist of the agreement that we have is that we've made it easier to share resources and people and funds and equipment. And perhaps most importantly, we're sharing science. And so you start getting a management strategy that's really long-term and effective. And as a group, when you think about the Sierra Nevada and the Central Valley, it's literally a group that can be put in the situation of everybody having to look upstream as well as downstream. So who's doing what on the supply on which you depend, as well as what impact are you having on the folks below you on the supplies on which they depend. So but it's not simple. But the other thing that's happening is that in the next few weeks, you will be hearing that the DWR is about to undergo a big change. And it actually is also—
Grant's coming back?
No, but they actually just announced a new department within DWR, and it's basically a department of multi-benefits. And what they're doing is they're bringing folks from different parts of DWR and starting to look at how they can coordinate cross boundaries. And so there's some really interesting shifts happening at the statewide scale, and part of it is really focused on acknowledging the need for investments in all parts of the system, and everybody who benefits needs to see that. And so literally the work that we've been going through here is a microcosm of what's happening statewide.
Is it being driven by Newsom or?
No. Well, Newsom is interested. He's put out an executive order asking for ideas on, excuse me, on developing more resilient water supply. And actually tomorrow I'll be running at the Water Commission the first hearing for public input on how to do that. But we're bringing it, the 4 agencies that are working on that are EWR, State Water Resources Control Board, the Central Valley Flood Board.
Just make the dam
And
center, right?
the commission, yeah. And so anyway, what we're looking at is what are those things that are critical that we need to do, but we're also bringing in academics and others, so it's that kind of work. It's interesting. It's a powerful time, and I really have to say that folks, MMWD keeps coming up as an example for a number of items, including—
Because of the One Tam?
No, actually one of the things that came up was the rate increase that we put forward. And the acknowledgement that everybody needs to be doing something very similar, because we all have done a poor job of recognizing the true cost of what it takes to capture and deliver water and keep the whole system high functioning. So.
Good luck tomorrow.
Yeah. Yeah, it'll be fun.
Okay. I don't have anything either. Ben?
Couple quick items. We're looks like hit by summer vacation time, and the doc meeting on Friday, we don't have a quorum, so that meeting's going to be canceled. And I wanted to remind the board, Monday is the board retreat. We'll be getting out a bit more information, and it will begin at 9:30 in the Romberg Center. That'll be a posted agenda.
Okay, now the consent calendar. So we have the minutes. You know, I did notice as far as public comment on the 28th, it was pretty sparse. So, you know, I do take some of Mimi's comment to heart there, that maybe we should, at a minimum, be listing the folks that spoke.
Yes, I was directed to do them that way, so I can change them however you
The,
say.
You know, how places do it is a bit all over the map. And to list, I mean, what we could do it by name or try and, I think many places have found if you try and capture what they're saying, it's hard to get it right from the view of the public.
Right.
So it could be maybe broadly worded, there was discussion related to something like that.
How about this? Why don't we put the name and put the time that they speak on the recording? That would at least allow somebody to get to exactly to that point of hearing it for themselves if they wish to hear it. I guess we could put a general subject in, you know, like they spoke on whatever, and see, you know, 17 minutes, 52 seconds.
Yeah, do we have that capability to?
We do.
Yeah, so that works for the board, we can get that, that makes sense.
Yeah.
It's a start anyway.
Yeah.
It's a start.
Yeah. So we'll amend the minutes to at least give that much more specificity. I think is a good idea and a good suggestion.
And that will include the 14th as well,
Can we do it on the 14th?
in the audio?
Yeah.
If we can do it, if you can do it, I think we should do it. As one.
Yep, that's what's up.
There's also public comment on other agenda items, like the CIP and the CMF.
Why don't we start with the CMF? I mean, the 28th was
Yeah.
pretty much a dedicated
Yep.
meeting as far as rates, so that is kind of a no-brainer. So at least that would capture those comments.
It may be useful for us to take a bit of a deeper dive and understand what the general practice is for comparable agencies. Do they name folks? Do they just put the number of folks that spoke? Do they talk about the topic? I think putting the time in there is something, and we could bring it back for board discussion.
Okay.
So
But I mean, let's start with that timing idea.
Right,
As
so
far as.
we'll do that on the 28th and bring it back.
Okay.
And let's take a look at what Mimi suggested about that Metropolitan Transportation guys.
Right.
Let's take a look at what they do.
It's actually Transportation of Authority of Marin right here.
TAN.
Thank you.
Yeah.
You know, one thing I might recommend is that on the printed agenda, that we indicate the website address so that people can hear get directed to where the meeting recordings are.
Okay, it's a start.
Yep.
Okay, so with those changes, is there a motion to approve?
I would make a motion to approve, but I'm not sure exactly what I'm approving. Are we taking the minutes off until they come back?
We're adding the name of the speakers and identifying the times.
So the minutes to be revised.
Okay,
Yeah.
And brought back.
okay,
Yeah.
okay,
Okay.
okay,
They should be brought back.
okay,
Yeah, all right.
that's fine.
All right, so, as amended, I, make a motion to approve the consent calendar.
Okay, with direction to staff.
Yeah.
Yep.
Okay,
I'll
Second.
Okay.
Good.
okay, all in favor?
Aye.
Any opposed? There's none opposed. So, general manager's report for the month of May.
Before we start that, it seems to me we're gonna resolve the dock issue. You know, this is the second month in a row, and you can see from this agenda, the results are showing here. And, you know, these meetings are just getting longer and longer and longer if we can't resolve the dock. So I don't have a suggestion of what we should do about it, but it seems to me that's critical
Yeah.
to get resolved, because of all of the committees, that one is probably the single most important
Yeah.
in terms of what happens on our board meetings. So, I don't know.
We, right, I don't think it's a pattern, even though it looks that way, the last two, the one on it was, Was it on the 28th or close thereabouts and?
No, it's always the third Friday.
Right.
So we're on the 21st. or
I guess the 21st.
22nd or something.
Staff was a bit immersed in preparation for the rate hearing, so we did cancel that. And here,
No, we didn't have a quorum. It's for the same reason.
it is.
Yeah, it was for a quorum, and, cause I was supposed to be out of town on Friday, but I'm not now. And even with me here, there's not enough.
Right.
So, you know, it was because there's no quorum.
So,
So just on this particular meeting, we will just have one item that'll go straight to the board. The other items, we can push off to the July doc.
I'm not pushing one way or the other, Mike. I mean, I'm happy to go through them. It's just, like I said, you can see the result. I mean, you know, that's what's happening because we're not getting through the stuff in, I think, anyway, in the doc. But maybe not. Maybe it's just a coincidental.
Yeah, we have one item from the doc on this side of the meeting tonight from that would have been on the last meeting.
That's the Ross Reservoir.
Right.
so this may be an artifact of summer vacation time.
Or
that's
maybe we need to move the doc meeting, to something that works.
Other than a Friday, you think, because.
I mean, it's always been on Friday, but it seems to me that it's a critical committee that we need to fix a way to make people can get there.
We could check in at the July board meeting about attendance for the next doc meeting.
Or at the retreat even.
Yeah.
Yeah,
Yeah,
that makes sense.
we can talk about this at the retreat a bit.
Yep. Okay.
Thanks, sorry to put it in.
That's all right.
Well, no, it's critical, you're right.
Okay, so now the general manager's report. So that's a consent.
No, no,
Yeah,
it's a water production. Mike's up.
Okay, I guess my brain is on vacation.
Long day, huh?
Okay, so, the water production and storage report.
Yeah, now we're
Thank
cooking.
Did you
Moving
have
right
some-
along.
No, the general manager report,
It's
that's
consent.
just what
It's
was
consent.
accepted.
Yeah, but we skipped over it, because we talked about the minutes, so I don't know.
No, he had his comments.
Okay, that's what I'm asking.
Commented, yeah.
Yeah, okay.
He had an announcement that we didn't really.
No, so I did my announcement under Director GM
Right.
announcement. Item 2 is a report distinguished from item 3. But generally, I think the board just accepts the report
Right.
unless there's questions.
Good.
So we're good.
We're good. Okay, so let's move on to item 3.
Okay, so our total fiscal year water production through yesterday was just over 23,400 acre feet, a little bit less than last year. And we released just under 9,500 acre feet of water into Lagunitas and Walker Creeks for habitat. Our current average production is just under 30 million gallons per day, a little bit higher than last year. And we're releasing about 6.76 million gallons per day into Lagunitas and Walker Creeks. We're still at 74 inches of rain for this fiscal year, quite a bit higher than last year, and over 20 inches more than our average for the entire year. Storage still looks good. Lagunitas and Phoenix are
Good, 100% in virtually every reservoir, we're almost July.
We're 15% above average for this time of year. And then finally, weather will be mild for the next week with highs in the mid-70s, mid-upper 70s. No rain in the forecast.
Put in a request to get rid of the Seattle summers, okay?
Yeah.
Okay, any comments or questions from the board?
Good work.
Okay, next item is the Ross Reservoir bypass pipeline.
Yes, this is a project to install 600 feet of bypass pipeline to replace the existing bypass going around Ross Reservoir. We opened 4 bids on bids were issued on May 14th, and on June 4th, we opened 4 bids. The lowest was submitted by Michael Paul Company in the amount of $441,050. This is the first of several projects planned up there. The next one is replacing the slide, but we need to do this work first. So we're recommending that the board award the contract to Michael Paul, and we'll get going on this project after August 1.
Have we worked with him before?
Yes.
not a name that I recognize off the top of my head, so.
They did the Paradise Fire Flow project.
Okay.
We've used them actually more than one time.
Yeah.
Yeah, they're
Yes.
common, but yeah.
It's interesting, you usually talk about a $1 million cost per mile, but this would be $4 million per mile at this rate.
Well, this is a good sized pipe.
Yeah,
It's
and
not
just
our typical, but
Right,
yeah.
no, I'm just acknowledging that the numbers vary and can be significant. Thanks.
So Mike, is this gonna be, placed consistent with the further build out up there?
Yes.
So it will not be, it won't conflict with the new storage?
No, this will be permanent.
And so, and then once the landslide is fixed, I mean, is the plan to keep Ross in operation?
Yes. Until we replace it.
Oh, okay, so when that new storage, the 4 million or 4 million comes in, Ross will be retired?
The tank, right, we'll demolish and replace the tank, yeah.
Okay.
So the bypass will be used during the project, because I think the
Construction.
first thing, we're gonna demo the existing tank and put the new tank in that same area.
Oh,
So we
okay,
need
that's the plan.
bypass line.
Is put it in the same
That's what it's
area?
for.
Yeah.
Yes,
Okay, I
it'll
thought
be
it was
the
on the
bypass
other
for the new
side.
tank.
Okay.
I move approval of resolution number 8537, authorizing award of contract 1896.
I'll second.
Thank you.
Okay, all in favor?
Aye.
Any opposed? None opposed. Okay, item 5 is the budget. So I assume Ben, Charlie's gonna bring that.
All right, this is going to be largely a major repeat of things you've seen. Real quickly, our process is we create a preliminary budget, which was brought before the board. We have a cost of service analysis based on the numbers projected in that preliminary budget, which includes the CIP. Then we go through the rate process. Rates have been approved, so we're now finalizing the budget that was based on all of that work, including the CIP for the next 10 years. So this evening, we'll do a quick overview. We'll talk about the operating budget, do the overview of the CIP, combine everything, just some quick information about rates. Really, if someone comes in and hasn't seen this before, it kind of puts it together. We did create a super water saver program, and then the summary will come at the end. So the overall FY20 budget comes in at $105.2 million. Turns out that's a 6.1% decrease from the fiscal year 2019 budget, and that's largely due to the adjustments made to the CIP program and bringing it in around the $20 million range. The fiscal year 21 budget is $107.9 million, which is a 2.6% increase over the FY20 budget.
Still lower than the 2018 budget, 2020.
Yes. This chart just kind of gives you a good breakdown of where the FY20 monies are intended to be spent. You have 20% for the pipe tank and pump replacement, pipeline and facilities 12%, and then on around. So of course the majority of our monies are being spent on the storage and treatment and conveyance of water to our customers. So the operating budget here is the breakdown. It's a total of $83.6 million for FY20, $86.2 million in FY21. Major cost drivers for our General and administrative would be things like we have a lot of people paying by credit cards. Our bank fees are actually going up quite a bit. We're showing as much as a 60% increase, about an additional $200,000 on bank fees due to credit card payments. Government fees increased 31%.
Do we charge a surcharge for credit cards?
We do not, but that is something on our list, convenience fee to explore, see what other agencies are doing and bring something back. to the
Most
board.
government agencies do charge a fee.
Yes, so that's definitely on our work plan for this next fiscal year. Materials and supplies, things like chemicals, up $300,000, almost $400,000 from previously budgeted, which is a combination of budget numbers from several years ago being a little bit lower, and then also the increases that we've been getting.
Can you go back, please? Why is it allocation to capital negative?
That's the capitalized labor. And so what that means is that we have personal services of $50.8 million, but 4.5 of that is used towards capital projects. And so we subtract
I
it
see.
out. But we're making sure, we thought it'd be more honest to have the 50.8 million there instead of 45 point something.
Okay.
So that's why we have it like
Okay.
that. So our 10-year capital improvement plan is shown here. With expected inflation, we're showing $241 million over 10 years. And this breakdown is the same that you've seen before, was the same in the preliminary budget that was presented to you back in January, and just minor tweaks here and there. So here it is in table form. Again, something you've seen many times before. Included in that capital plan are things like $20 million for treatment plant upgrades, $96 million for replacement of 50 miles of pipe, the repair of the Smith Saddle tanks, and also to replace Ross Reservoir at some point.
You know, one thing I might recommend is in the future, especially with our recent past experience, it might be good to show what the previous 10 years capital improvement plan was in terms of dollars, as well as the major projects that were accomplished.
Certainly, we can note
Yeah, I
that.
think that might be helpful in the future, just because folks said that we weren't doing our job.
With respect to watershed wildfire risk, included in this budget is $1 million per year dedicated to fire and fuel reduction, which is in addition to the normal monies that are dedicated to the watershed. We have about 25,000 structures within 2 miles, but almost as important or equally as important to us is the water quality that the watershed provides to us and the protections needed to prevent fire and deal with, mitigate any possible detriments from fire. So our total operating and CIP is again the 105 or 107 million. This is the two charts summed up, and it's again almost exactly the same numbers that you were presented in January. Our comparative reserves also is the same table, and we will be covering reserve policies during this coming year and talking in depth with the board about whether we have the right amounts, whether we want to adjust them, and also we'll do a survey when we bring it to the board of what other agencies in the industry are doing as far as their reserves.
Could you do an analysis on the pension reserve as far as whether we should actually be prepaying on some of our pension?
Yes, actually, that is one of the items we do have on our work plan, is to do an analysis of our pensions, to see if what the benefits are. We could accelerate payments on the actuarial unfunded liability, and there is a savings over time of that. It just depends on how much we can put towards it.
Right.
It's kind of like another debt payment, However, we're not being charged interest on it, we're just using compounding interest that we receive to lower the unfunded liability.
Yeah, it's more like an annuity. I think
Exactly.
it's you're funding an annuity, but recognize that already of the 6 million we pay, 2/3 of that's going to that function. So our actual pension costs are about $2 million a year, and we pay 6 million. So 4 million a year is already flowing to retire that. And that was a surprise to me when I found that out too, that to retire that liability. So Charlie and I have been talking about this a lot. It's difficult to know what's the best policy.
Yeah, well, it'd be interesting just to see it penciled out.
Yeah, we plan to do a thorough analysis and bring it back to the board during this coming
The
fiscal
other thing
year.
that caught my eye on that chart was that interest is not segregated by fund. So I don't know if that's even worth considering. So it's, in other words, the reserve levels remain the same, even, so the interest is accruing, I guess, to the general fund, so.
That's correct, yes. Yes, and that's something we would do in looking at our various fiscal policies, is if we have a reserve fund and we need to use a reserve fund, what's our plan for replenishing that fund? Sometimes things like interest goes in there, builds up to a certain amount, and then we can use it for certain things. So that's something that we would look at, definitely.
Okay.
It's a tricky area though, as I recall, because we're not allowed to like take bond funds and make interest on them. You know, we can't do that.
Right, but the pension, that was
A little
not
bit.
bond funded.
Yeah.
No.
Right, we are careful about our arbitrage with our bond
Yes.
funding, and we do have to do, we pay someone to do very extensive arbitrage calculations for us that we report to the IRS.
Right, okay. It just caught my eyes. So.
Yeah.
The other thing that's interesting, Larry, about the pension reserve fund is that I'm kind of a little loose on the numbers right now, but as I recall, there was a 45-year payout and a 30-year payout, and we're on the 45 now or on the 25?
I think that page had a 30 and a 15.
I mean, that's what it was, but it was 2045.
Yeah.
It was the time. So in 2045, at the rate we're currently paying, we pay it all off. So assuming it does, assuming of course that CalPERS can achieve their 7.25%. Now the fact that they don't achieve that 7.25%, then the numbers change and the liability increases. So, you know, but it's an interesting question about, is it a good place to put money? That's kind of one of the issues, and it depends on CalPERS's return, but we're sort of stuck with them, no matter how we do it. We can't get around that problem. So if they're not making their percentage, it's gonna hurt us either way, you know?
Well, we're only earning, what, 2.5%, 2.1, 2.2.
Right.
Sitting there, so.
If that.
So if CalPERS beats that, then you might be better off putting it down, but.
Yes.
Anyway, that's for you to kind of calculate for us. So.
And we'll do
He's working on it.
We'll do a thorough evaluation and bring it back to the board. When we switch to rates, this is where we end up after the rate increase that was approved. We're not quite in the middle, but we're actually close to the middle. What we will see over time, it typically happens is we start migrating to the left as other agencies need to invest in their system.
Right, and that is an important point for us to understand. What we did with the rate increase is fund our capital program as written, the CIP, for the next 10 years essentially. And that's somewhat unique with these. So as they need to fund their capital investments, we will see us migrating to the left, probably over time closer to where we were, the fourth or fifth to the left, somewhere around there.
You know, just a comparative observation that is MMWD right now, our cost for a CCF is just under $4.
It's just over the tier 1.
Is it
407, I think.
Yeah.
Mid-Peninsula Water District is charging $7.30,
Sure.
something for a CCF. Just,
Sure. That curve is a very tricky curve though. You know, number one, I don't know that it matters where you fall on that curve, because they're not all apples on that curve.
They all have different costs.
Their basic fundamentals are different.
Yeah.
And, you know, it's interesting for discussion purposes, but like taking Santa Rosa, for instance, at the far left, you know, sure, because of their system and what they don't do very much in terms of managing, mostly it's done by Sonoma County. And then, you know, same with North Marin, they don't do very much.
Same with Dublin, San Ramon.
Dublin, San
77
Ramon,
water.
sure.
Yeah. And also we're funding our watershed work, whereas SFPUC gives Yosemite National Park, for the privilege of all the Hetch Hetchy water, the same amount that we spend on this watershed every year.
Good deal.
So the number, I mean, so as you said, this stuff is tricky, and it's,
Yeah.
in many cases, it's actually false.
Well, I'm not even sure, Armando.
Yeah, I mean-
if it's not always false.
Right.
You know, because it's
And
not
that's
like buying
misleading is
Chevy
a
and
better word.
a Ford, you know, this
Yeah.
is different, I mean,
But,
cause.
but I guess what I'm saying is that there's things up there that don't recognize the total cost of what some of those organizations should be investing in.
Oh, that's for sure.
Yep.
And I think that, a good thing to put on that curve, if you could do it, is the AWWA number. Remember the one that was substantially above our number? There was a fair amount of discussion about that issue in the AWWA meeting, about what the average rate of increase has been, historical.
And what it should have been.
Mm-hmm.
What if you have a public comment, do you guys mind if we?
Sure.
Roger, come on up.
Roger Roberts, in talking about this issue, one way to normalize the comparison is to look at the true cost of water for each of these agencies.
Yeah.
What does North Marin do different than West Marin versus?
Oh, West Marin's a whole different animal. I mean, that's a real, because they have to pump the water out of the ground, and, you know, it's a whole, this side, they're like Santa Rosa or Petaluma, they're just taking water out of the aqueduct. So they basically do nothing.
Right.
Not, no disrespect to Santa Rosa, but compared to developing the water, treating it and putting it in the pipe and all that kind of stuff. And then you get to West Marin, that's a real, you know, they gotta work out there. They've gotta actually provide the water and manage it and treat it and meet the public health standards. And basically places like North Marin, it's just, you know, pump it out of the water, throw a little chlorine in it, pump it out of the aqueduct, throw a little, not even pump it, let it flow out of the aqueduct.
Well,
Yeah.
the West Marin is a better comparable to us than,
Yes, as is someone like East Bay Mud, but East Bay Mud's complicated because they have the sewage in with it. And I don't know, what is it, half of their budget?
I think this is just water.
water side.
So it would be separate.
But their management's mixed, you know, so.
Of course, they do have economies of scale, which is the other kind of
Sure.
non-normalizing,
Right.
but pretty significant factor in this. 10 times the population, they can spread costs out.
Absolutely.
So, with regards to rates, this is how we ended up with the 5/8 inch meter and the 1 inch meter. Basically a per month 16 and 34 cent dollar increase, or 39.42 cents increase. The super water saver will go into effect. We're working on the computer programming right now. The 3,000 customers that use the least amount of water will see an $8 credit on their bills.
Is there any cutoff, or is it just the lowest 3,000?
It's the lowest 3,000. So it will fluctuate. There will be people on the line, and they'll get it 1 month, and then 2 months later they won't. And so it's dynamically calculated that way. And so we end up with a budget that decreased by 6.1%, showing that we're really trying to be fiscally responsible. The O&M increase we've held at 4%. Capital funding is at $21.6 million, right at the target that the board has asked, and following guidance from the board and direction, a super water saver credit program has been created, and that's the budget for this year.
So logically, and I may be completely incorrect here, but if the budget has reduced 6% and we raised rates 4%, then there should be a 10% surplus?
Well, we did a 14% decrease, I think, in CIP, actually a higher decrease in CIP, and that's what compensated for the overall. Also, when you take into consideration that our debt is flat, that also skews the number. Ben has actually asked me this many times, and it does work out that we come up with really ended up being around a 3.9% increase or a 3.8% increase, and it's just so hard to peg it right on the number each time. Plus, there's unexpected things like paving has gone up through the roof, and we've been shifting around funds in the last month to cover our paving costs, which is something that's totally out of our control. It's work that we have to complete. So altogether, I know that the staff feels comfortable that we're going to get a lot of really good things done with this budget, and I believe it met all the targets that we talked about going back to, I think, last November when we first talked to the board about how we needed to build the budget.
I assume the paving issues are related to capital improvement program, not to repairs, the majority of the cost.
Actually, the majority are repairs, because once we open up the hole and then do a temporary, then we have to come in and do a fairly sizable overlay to repair everything.
Are you sure about that? I mean, I'm not questioning what you just said.
Yeah.
But about the percentages, because it would just seem to me that if we're replacing miles of pipeline, that's got to exceed the.
It
Oh,
could
yes.
be. Those costs are built into the capital projects.
Yes, yeah.
So we may not know precisely the relative breakdown. of
That's what I would
payment
think.
costs, but
Sorry, I misunderstood.
The,
Yes.
the operating budget is from the repairs.
I fully understand
And that
that.
has skyrocketed.
And of course, where that next leads to is that if we should then feed back to the permitting side for the people who need improvements. There's even though like that young woman was complaining about the $16,000 bill for paving, it sounds like that may not be enough.
Well, we actually we went through an exercise in the last year to bring our costs,
Current,
our
yeah.
charges current
I
for
remember
those
Paul
costs.
came in with this. Yeah.
Right,
Sure.
and so it's really what I was trying to say is that we budget so much for the paving each year for the repairs, and we're finding that it's outstripping the budget considerably because it's just gotten more expensive. The paving costs themselves, but also the amount we have to do. It's just one example. Chemicals are another example of prices going up.
Yeah. Do we keep track of shut-offs, customer shut-offs?
Oh yes, we do.
So that would be something that I think might be interesting to see in our monthly reports. And the other thing that I saw that just sort of a, customary thing we see are service upgrades. I'd like us to track service reductions, especially now that we're gonna be, raising rates based on the size of service. But I'm interested to see it's never really been an issue that's been brought forward to the board as far as customer shut-offs or maintaining water service. So I really don't know what those figures are.
Do you have any idea how many there are?
Actually, I don't, but we'll find out. We'll have that for you. very
I
soon.
can't imagine there's too many, but there could be more than I would think. I don't know.
I think it's a fairly routine activity. I don't know, I don't know the numbers.
Right.
But I do see the folks every morning going in there and
With the money, yeah.
determining, where they got, which places are they gonna be putting shut-off notices and that kind of stuff. So it's an ongoing activity. We can add the numbers to the monthly report.
I just think it's something we should be tracking and be aware of with this new
Is it going up?
CMF.
When you say
it is.
routine, you
Exactly.
mean consistent.
Consistent,
numbers.
yes.
Yeah.
Yeah,
I don't know for sure that the numbers are consistent. I was just reflecting, it's not a rare event. It's somewhat of a routine. Folks need to be reminded to pay but actual shut-offs, that's the number I don't know, but It'll be good data, we'll pull that
Yeah,
together.
that would be.
And then there's the philosophy of whether we should shut them off at all, which is a whole nother discussion, you know, whether that's really a good policy. I think it's fine to threaten. And I realize once if you threaten and then you don't do it, you know, they're gonna say, they don't, not serious about it. But there still is the issue of the right to water and the need. You know, it's easy to make it a business and turn your face, you know, away from them, but
There has been some related recent legislation, and Mary will give us a quick update on it.
Yeah, we're working with customer service on creating, first of all, updating our ordinance on the procedures for terminating service, creating policy that is available to all our customers. The time period for waiting to turn off service is longer in the new legislation than in our ordinance.
in how long is like 6 months?
I
or
think
2
our
months?
ordinance is about 30 days and the new legislation is 60.
So we'll be bringing the ordinance back. That may be a good time to bring the data to the
Sure.
board to
Yeah.
review that.
Yeah, and I just think it's something we need to keep track of.
I agree.
as we go forward.
And it's just a personal experience with it. The building I'm in is the oldest high-rise building in Berkeley, our office, and it's a 12-story building, and the owners of it got into a little financial problem, and PG&E came in one day and it obviously has elevators, shut the power off, slammed it, pulled the switch on the building while the building was fully occupied, and no warning. I mean, there was probably warning to the owners, but there was no warning to the tenants. And so, you know, I mean, I think that was pretty stupid on PG&E's part. You know, I guess they got the message across that they need to be paid, but
The new legislation actually has requirements in certain circumstances for notification to the tenants. Yeah.
well, one of the big problems is, and this happens all the time, is the tenants pay the bill. Tenants pay to their landlord. Landlord doesn't pay the bill, and you got that disconnect between, you know, and the same thing's true with property tax. A lot of these things happen that the tenant's done their share,
Yeah.
but it hasn't gotten to
Right.
where it should have gone.
Right, right. Happened in a lot of foreclosures too.
Sure.
So, Okay,
So we recommend passing the FY20 and FY21 budget.
okay. Public comment?
I just have a simple comment of requesting that when you have a PowerPoint presentation, that there be copies, hard copies available for the public. Also, repeat request, suggestion, whatever. I know it's not necessarily required by the Brown Act because PowerPoint didn't exist when the Brown Act was written, but it would be really a good service for the public to post your PowerPoints in advance in your 72-hour window to your website, and certainly no later than, you know, tomorrow before noon, but it really would be good to have it before the meeting. Thank you.
But
Let's
we
make that a
generally,
goal, you know.
we are, I mean, I think that has been a goal.
So what we are now posting, we went back 6 months and going forward, all the PowerPoints provided to the board are posted on our website within a day or two of the board meeting.
But I think Mimi's point is.
Having
good
them
too.
available for the audience.
I think it would also be good to have them at 72 hours, because if we're getting the agenda out and the packet out 72 hours, why can't we set the deadline for the PowerPoints and just say, you know, sure, sometimes you may not make it. And I don't think it should be codified into anything, just make it a policy, you know, just a oral policy that we tried, that's our goal. And, you know, if we don't make it, we don't make it, but we'll try to make the 72 hours. When the packet comes out, let's see if we can get it up, even if it has to be changed. You know, even if the one that actually is shown here, it doesn't match exactly what was put on. Okay, you just say, hey, it was changed here and changed here and changed here. And, you know, you may notice a difference, this number now is a little different. But I know historically, your end of the stick has been the one that's always lagging on getting these things done. And I know it's to make them as accurate as possible, but they seem to run right up to the deadline. Whereas I think more of the engineering side and the operations side to kind of get them done, and you know, they're done because the details don't change. But your end seems to have, not you particularly, but historically.
I think we've been pretty good the last 2.5 years.
It has been, but I'm really referring to the previous, that it was always being changed right up to the last second, because I would get frustrated, you know, understand, we don't get it either,
Thank
you know?
you.
So, it's a mutually
We're
shared.
all in the same boat.
We're all in the same boat, yes.
Right.
Well, we'll strive for,
Okay.
getting
Come on
them
forward.
in.
Sorry, go ahead.
I was just
Roger Roberts
Something that I heard
again.
the board on this.
Reiterate,
I realize this is something that you may have already thought about, but it comes up in item 8 in tonight's agenda. If there's a PG&E outage, you're going to solve that problem with higher diesel electric units. Your budget should have some kind of a contingency fund in it, looking forward to cover those costs. And I would suggest that that be added to the budget. Thank you.
Roger, before you leave, could you define what you think the meaning of true cost of water is?
Well, the best example, I think, is the fact that in Southern California, people are getting subsidized water from the federal system. And their true cost of water does not cover that system-wide actual cost to the public. So true cost of water is really all the direct and indirect costs of providing that water.
Thanks.
okay, any other public comment? Okay, seeing none, bring it back, any further discussion?
I'll move approval for the operating and capital budget for FY20 and FY21 as presented. Second.
Okay, all in favor say aye.
Aye.
Any opposed? None opposed? Okay,
Thanks for all your hard work.
Yep, thank you.
Me and a lot of other people.
Yeah.
Team effort.
I meant it as a group.
Thank you.
Well, you brought it across the finish line, so.
Thank you, McGill.
Yeah.
Lots of work back in
Yeah, yeah.
Okay, item 6, pretty interesting item. Are you gonna be presenting that one too?
Yes, sir. So this is our annual renewal of insurance policies. We're presenting to the board a range, but we do have a recommendation. The range goes from $659,979 to $669,576. However, we do recommend the higher number. The difference there really is located in our pollution policy. One quote was 16,000, another was 19,000. The 19,000 covers things like fines and other costs of a spill into a stream. So we knew that was important to the board, so that's why we're recommending that. A smaller one is a difference in the crime. It's actually a lower amount than we were paying by about $300. I will state that Seth Cole and Mac McManus from Alliant are here this evening. If the board has any questions for them, they're our broker that the board approved the contract back in January for. They worked very hard putting together this slate of policies for us. Essentially, it's the same as you've had in the past as far as the amount of coverage. There are some differences, such as we had Travelers for property. Last year, Travelers did send a letter saying that they were not renewing this year, not because they didn't like us, but because they weren't writing these policies. It turns out that there's a lot of difficulty in getting property insurance due to the recent wildfires that hit the state. We are having what's called a non-admitted carrier. The simple version of what admitted and non-admitted are really twofold. One, an admitted carrier has to report all of their rates to the state and has to charge all of their clients those rates and can't change them without notifying the state. Non-admitted can set their rates as they see fit. The other condition of being admitted is that it has a backstop, I think of $500,000. If the insurance company were to go under, there would be that pot of money. Granted, $500,000 is a lot of money on one hand. As far as the insurance we're talking about, it's not a considerable amount. I did have it checked, and in the past, we had a non-admitted property carrier back in 2017, which is Peleus Insurance. So we have had a non-admitted in the past. In fact, almost every year for automotive insurance coverage, we've gone with non-admitted. If you can see the highlighted area I pulled all, McYoung actually pulled all the previous ones going back to 2000 for me. So having said that, if you have any questions, certainly we are happy to entertain them. Plus we have Matt and Seth here. Definitely we recommend the slate of coverage that equals $669,000.
I think we should ask them to come up. I mean, they're here, and they're
Yeah,
taking
sure.
the time. I would like to know what kind of trends you're seeing in terms of future. Is the quotes, are they gonna run similar next year, in your opinion, or do you think this is a dip or a rise? I know I had something happen at my home, which I thought was very strange. State Farm has treated us as like a lost cousin. All of a sudden, they sent somebody out to look at the house. I mean, we've been there since '92. They've never, ever come to look at the house. And they found out that we had gotten rid of our shake roof, put a steel roof on, which they found very interesting, because we were still listed as shake. And so, there's things coming. Another one that we've heard rumbles about is that you may not be able to get homeowners insurance without sprinklers. There's been some rumbles about that
Yeah,
kicked around.
Yeah, so a couple of things. For municipalities, it depends on what line of coverage we're talking about, right? So for liability coverage for municipalities, cities, right, who have road design issues, have sidewalk issues, have police officers that carry, firearms, they're experiencing a really difficult time right now with insurance because of recent jury settlements and verdicts. But for water agencies, it hasn't spilled over into the liability insurance market for you. That's been pretty stable. And so that's going to be really driven by your own loss experience. So we expect that market on the liability side to remain pretty stable into the near future. Now things can change, but what we know today. Property market's a different story. And you're right, it's hitting homeowners and it's hitting the commercial side both. Homeowners first, the real concern is we saw what happened up at the town of Paradise, right? 10,000 homes lost, to a wildfire. That's got all of the homeowners insurers very worried. And so you're right, they are doing things now where they're coming out and doing inspections. They're requiring that you create defensible space or they'll non-renew your policy. So that's alarming because, a lot of us, most of us, at least I do have I have a loan on my home, right? The bank requires me to have insurance. So what happens when I can't get insurance? So
What does happen?
So what I understand is the banks believe that it's called forced coverage, where the banks will go secure coverage for you and send you a bill. What that looks like, I'm not sure. Let's hope we never get to that place. But that could potentially be on the rise, and that's going to be largely dictated by wildfire. What kind of wildfires do we see into the future? On the commercial side, for buyers like yourself and for private organizations, we do expect at least next year and into the future that rates will continue to increase. And that's largely because the property insurance market, by and large, the last 3 years has been unprofitable. Largely due to 2017 due to catastrophic losses, which was really driven by the 3 hurricanes that we had in the southeast and some other catastrophic events around the world. $150 billion in insured losses to the insurance industry. So a difficult year. Last year, 2018, followed by nearly $80 billion in insured losses to the insurance industry. That was a single hurricane that occurred. That didn't cause all of it, but there was a single Hurricane Michael in the southeast. And then the California wildfires, people are estimating $20 to $30 billion in insured losses last year. Just a phenomenal number. And that's largely homeowners, actually. That's largely homes and not businesses and commercial properties. So we do think that the trend will continue, that we will see rates rise in the near future. Knock on wood, hopefully we have a couple of quiet seasons. Hurricane season officially started 3 weeks ago, so hopefully we get through a quiet hurricane season. Hopefully, I know that we've had a couple of small collectively, but there's been a couple of small wildfires. Luckily, no real significant damage yet this year. So a lot will depend.
150 fires going right now, I think, in California.
That's just amazing. And so, so in summary, and I know I'm taking up a lot of your time, and you've got a full agenda, but in summary, I do think that we're going to continue to see a trend for property, and both on the homeowners and commercial side, where we're going to see rates go, and it could be more challenging to obtain coverage into the near future. And then, long term, it's really hard to say.
One thing I noticed too in my commercial business policy is we had always had multi-year policy.
Oh, yeah.
until this year.
The multi-year rate guarantees, yeah.
And it was flat fee for 2 years. For 20 years, we had same company, same policy. This year, they said, no, 1 year only.
Yeah, those rate guarantees or premium guarantees have gone away for now. You know, hopefully things will settle down and they'll come back, but yes, we're seeing that too.
What about, the one that struck me is the non-admitted carriers? I mean, that kind of blew my mind, that we didn't have an admitted carrier that was willing to write a policy. That's shocking to me, really.
Yeah, and so I view it a little bit differently, being in the business. I've been doing this 25 years and work with, you showed the list of all the rate comparisons. Most of those are actually our clients who you had on that board, and almost all of them have coverage with non-admitted carriers. It's pretty common to have insurance with non-admitted carriers. Charlie had mentioned the difference, and I'll kind of expand on the differences between admitted and non-admitted. Non-admitted carriers or admitted carriers are quote-unquote regulated by the Department of Insurance. As Charlie mentioned, part of that is that they have to file their rates that they charge their customers with the Department of Insurance. They also have to file their policy forms. So the policy forms, the endorsements that afford the coverage, they have to file those with the Department of Insurance, where non-admitted carrier does not have to. The other difference is that Charlie alluded to would be the CIGA, California Insurance Guarantee Association. It's a fund if insurers become insolvent. Non-admitted carriers pay into that, or admitted carriers pay into that. Non-admitted carriers do not pay into that. There are caps on the line of coverage, $500,000. So it's something, you carry $200 million in limit. So if you had a significant loss, $500,000, it's something, right? But you had a $10 million loss. What are you really getting out of that fund, right? There's a list called the List of Approved Surplus Lines Insurers. The California Department of Insurance approves non-admitted carriers in the state who are eligible to write business in the state. The carriers that we're proposing are on the lastly list and are A-rated by AM Best. It's a financial rating organization that they essentially assign a financial strength rating to an insurance company on its ability to pay claims. Essentially how much money do they have in the bank and are they able to meet their obligations? And it's just like being in school. A is really good, F is not so good. F is an insurance company in liquidation. We recommend, our company only allows us to write business with carriers that are A-rated and above. And so the carriers are A-rated. So it's pretty commonplace to have carriers, non-admitted carriers. The key is to work with non-admitted carriers that are very financially sound and strong. And that's what we do. But again, I work with hundreds of public agencies in water and districts throughout the country. I don't know that I have one that doesn't have non-admitted carriers on their program.
For property?
For property and other lines of coverage, excess liability, property. Workers' compensation, you won't see non-admitted on workers' comp. It's a statutory coverage. And because it's a statutory coverage, it has to be on an admitted basis. But pretty much all other lines of coverage are offered on a non-admitted basis.
I don't think the state of California requires it. We do a fair amount just with the state, and they do require the A. And our insurance has to have an A in order to qualify for them to take our insurance. But I've never seen anything about admitted or non-admitted.
No, they'll say something like, the state of California is actually our client, so we actually help them establish those requirements. And so what you see from them is what we recommended that they require from people who do business with the state. And yeah, usually what you'll see in there is that they'll require the insurance companies that are eligible to do business in the state of California.
It just gives me pause that we don't have an admitted carrier that's writing policies. I mean, maybe this hasn't changed, but it seems to me, with the climate change and all these disasters that are happening, it's a little sobering.
Did you say, Charlie, it has been our practice to have non-admitted?
No, it's actually been our practice to have admitted.
So this is a change in that.
Yes, however, we have in the past had a non-admitted. So at least one time in the past we've had property, and then in our auto, it's been very common to be non-admitted. But certainly when we sat down with Seth and Matt, we expressed to them how much we really were interested in admitted, and they've told us how they went to the ends of the earth trying to find one, and they were not able to locate one that they thought was worthy to recommend.
Yeah, the challenge in California is the wildfire risk. is that the state, what we would call the standard market or admitted market, has really pulled back capacity in offering coverage to those who either have wildfire risk or a perceived wildfire risk. You're not alone. This is impacting lots of agencies throughout the state, and a lot of homeowners, quite frankly. A lot of homeowners can no longer get admitted policies through a State Farm or someone else. They're having to go to Lloyd's of London and other markets to obtain homeowners insurance.
Yeah, it's a sign of the times.
Yeah.
Larry?
Yes.
Excuse me, I just want you to know that I had the same thoughts about a non-admitted carrier. We push these folks pretty hard because historically, in the property arena, the liability arena, we have not had non-admitted carriers. There may be in the auto arena,
Oh, yeah.
that may be a different story. These folks approached 8 companies, admitted carriers. The company they recommended to us actually provides insurance, property insurance for the Aqua JPIA, which is really important. I had the same, I just want you to know I had the same thoughts. Charlie and I really pressed them, and they're telling us that it's basically a new paradigm.
Yeah, it is.
Yeah.
It is.
Well, it's not a function of rates.
That is
It's
the significance
they're
of it. I
not
think.
doing
You know,
business.
maybe the insurance industry
business.
Any business.
will force us to change some of our practices to
Yeah.
reduce risk.
And we hope it's short-lived. I mean, only, time will tell, obviously, but we hope it's short-lived.
And I didn't realize SEGA's only 500,000. I thought that covered your policy limit.
Yeah, so I think there's a misperception out there on what SIGA really is and what it does, and it depends by line of coverage. You'll get some more protection under workers' compensation because, again, that's a statutory coverage required that everyone have it. So it depends by coverage, yeah, but it's not quite what everyone thinks it is.
No.
But even then, you have state fund, which is how the state solved the problem. When the private guys got too pushy, we have state fund, for instance.
Yep.
Because we got tired of arguing about our business. State fund sets the rate, and that's it. And they'll insure you.
Yep.
As long as you don't have a loss history problem.
Yep.
But if you're normal, they'll take you even if the private guys are giving you a hard time.
Yep.
So I kind of see that future is likely to play out in California, that I can see them getting into this same kind of approach of this quasi-public-private company that issues insurance. Because
14 point bold-faced notice that they give you is a little daunting all by itself.
Sure.
Yeah.
Well, the outcome of the review that was done on our house was a letter from State Farm telling us that basically, if you read it clearly, that we're underinsured. And I find that very humorous because, only the broker sets the rate. I mean, the broker determines the value. You call a broker up and say, I want insurance, and they say, okay, here's how much it costs. There's really no discussion about what the house should be valued at or what it could be valued at or what the replacement cost is. It's just dumped on the broker, and he just feeds you back and says, this is the policy we recommend. And now all of a sudden State Farm is saying, well, you should call your broker because you really want to check to see that you're insured enough. Or they were very careful with their wording, but that was the gist of what they were saying was. And of course, our friends in Santa Rosa, the average was 50%. That they come and say, here's the check. Well, what am I going to do with this? This is going to cost of reconstruction. They said, that's what you're insured for.
Oh, yeah, and we're gonna have to have public comment. So any other questions from the board? Okay, let's have some.
I'd just like to say this too. Thank you very much for coming.
Yeah,
And your analysis is very comprehensive, and we appreciate that because it's even with Mary's expertise, it's sure helpful to have guys that are right there on the main line.
Yeah, well, we're happy to be here and happy to answer any questions anytime.
Okay, thank you guys. Thank you very much.
I have a question for the experts, and that is what's happening in the reinsurance market and how's that affecting our rates and coverages? And then I have a question of the board is whether or not the board has ever considered earthquake insurance. And what were your findings and reasons for having or not having earthquake insurance?
You want me to address the reinsurance question?
Yeah, there's a discussion, I think, of earthquake in the.
I can handle that.
You wanna go first?
Yeah, just real quick, last year we did ask for quotes on earthquake insurance, and what we received back and presented to the board was very little coverage for very high premiums. Very quick summary. We have been in discussion with Seth and Matt, and they're working on and have given me some preliminary stuff that we have questions about. We're planning on doing a thorough evaluation, and if it comes back the same as last year, we know where we stand. But if it comes back better, we plan to bring it back to the board.
Okay. And then reinsurance,
Yeah, so that's a great question, and interestingly enough, in the property world, insurance companies are now relying more and more heavily on reinsurance, and so reinsurance is really dictating the terms that insurance companies are able to offer you. We literally are in a global industry, in a global market. The reinsurers who reinsure your risk are the same reinsurers who reinsure risks in Japan and China and other places of the world. So truly, when there are global catastrophic events, it does impact the buyers here domestically. And so, but we are seeing a much higher reliance by underwriters and insurance companies on the property side here domestically on reinsurers, and that largely dictates what the terms and pricing that they're able to provide.
Well, can you talk to capacity issues?
Yeah. So capacity essentially is the amount of coverage that insurance companies are willing to offer. And so we're seeing a real reduction in capacity. Insurance companies are no longer, and reinsurers who are driving, what their insurance companies do, just simply won't offer as much capacity. So it's much more difficult to obtain the limits that you've enjoyed or anyone has enjoyed in the past to be able to provide the coverage. So yeah, capacity has definitely diminished in this market.
And I can speak to one comment specific to travelers who you guys had for many, many years, I believe since 2012. Yes, 2012. So Travelers was putting up $200 million in capacity for your loss limit since then, right? This year, if they were ever going to entertain the business, they were only going to put up $20 million. So that was the capacity. So
is that limits?
Limits. Their loss limit. Yes. So in-house, they were taking on the risk of 200 in the past. If they were to renew your coverage, they were going to only do it for 20 and do a 30% rate increase on that.
And so is Alliant the non-admitted carrier? Does it have reinsurance?
Alliant we are a commercial insurance broker, so we're
them.
Okay.
Yeah.
So the property carrier that you're recommending, is it reinsured?
Yes,
of course.
It's a subsidiary of Alliant.
Yeah.
Explain what API is.
Yeah, so and I'll explain that. So Alliant, as Matt mentioned, we're an insurance brokerage firm. We have created group purchase property program for public entities called the Alliant Property Insurance Program, but we take no risk. The lead insurance company on that is Lexington Insurance Company, which is an AIG, American International Group company. They're the lead on it.
Good
AIG
stable company.
Yeah. We can go on and on and on, but they've been very good to us and our clients. But they do buy a certain level of reinsurance. I couldn't tell you exactly what reinsurance they purchase, but I don't know any insurance companies that don't purchase reinsurance. It just at what level do they purchase reinsurance? And every company has a different philosophy on how much reinsurance they purchase.
We work a lot with insurance companies, and my experience has been it's like 95% of the policies reinsured in general. The actual guy the name on the piece of paper is only there as a broker, basically. They're handling the paperwork. And I know from personal experience that I've been told this is gasoline storage tanks, that if the return from the state fund was less than $500,000, don't bother to go after it, because the cost to our client, who's the named insured, is greater than what they're going to get of their share of the $500,000. So they basically just wrote it off, that it wasn't worth chasing it because the reinsurers are getting a free ride on the insurance company because of this 95%.
Well, it'd be interesting to find out what percentage is reinsured on this policy. So.
Yeah, we'll see what information we can provide. Insurance companies don't always provide the levels of reinsurance that they purchase, but we can get some information and report back to Charlie and his team
that would be
to get back to you all on that.
And then you're recommending the higher pollution limit or the higher pollution premium?
Yes, we are.
Okay.
And the other thing I think we should think about is, you know, we should have a review of our policy limits. One thing I've been experiencing in the business side is they just keep, the risk managers keep raising the limits and raising the limits. I mean, we have people come to us, they want $10 million worth of insurance. We carry 2. I said, you can have all you want, but here's the cost of going from 10 to 2. You want that? You pay it, we'll do it. But otherwise, it's 2. And we have a 0 loss history. So I think that's one of the issues, you know, what's our loss history versus what we're carrying? Do we really need that level of insurance? Because what you just said was fascinating to me. The Travelers is telling us we get 1/10 of the insurance for 30% increase in the premium. So, you know, that's the way the market works, right? Is they cut the risk and raise the rate, and that's where the market gets determined. It's, finally the insurance says, I'm not gonna pay that anymore, I'll cut this and see what happens.
Yeah, and a general rule of thumb is that, you know, when it comes to property insurance and the limits you purchase for property insurance, is that you kind of look at the spread of risk, where are your assets, how close in proximity are they, and then what kind of perils, right? And for you, you know, like let's say there is a large fire, you know, how much of, you know, how many of your facilities could be impacted by that fire, and what are the values associated with those facilities? And we call that a probable maximum loss, and we try to determine, is that enough? Usually if you have, and I think your total insured values is somewhere around $260, $270 million, you don't usually need that much because it's very unlikely, you know, unless you're in Florida and you have hurricane risk or something of that nature, that you would probably lose all of your facilities. Even when you look at what happened in Paradise, as horrible as that was, both the town of Paradise and the irrigation district, neither of them lost all their facilities, right? And that was a catastrophic loss. And so you usually don't need to buy the amount of limits to match your total insured values. It just depends on where your assets are located.
But I understand at Paradise that they're serving water, but it's a kind of a complicated situation because the water's not meeting the EPA standards. So they're in kind of a sticky issue about whether they can really charge for it.
They had a boil, so that's my client. They had that boil water alert, right? And then they found out that the actual heating, the water was actually, the chemical was reacting to that and making the matters worse. So they had to tell people to stop using the water. You can't bathe in it, you can't drink with it. So that's a whole nother issue that they're dealing with right now.
Now, I don't know if that affects us, you know, that would be the kind of risk that would be interesting to see if there's an insurability of that for your basically loss of business from a catastrophic event.
Yeah, so that's called business interruption insurance, and you do have that coverage. And what you try to do is forecast, you know, if something were to happen. I mean, I don't think anyone could really forecast what happened in Paradise, but if you could forecast what might happen, whereas you didn't have the ability to sell your product, water, right? What kind of loss could you sustain? And then you schedule those hours on your policy, which you do. So you do have that coverage.
You guys very much.
Thank you for your time. Sorry we took up a lot of your time.
That's all right. That's okay. Okay, any further discussion, questions? Is there a motion to approve the
Approval
recommendation?
of the higher level,
Right,
what was the higher level?
669, 576.
Yeah, 669.
576, yeah. Okay, is there a second?
Second.
Okay, all in favor?
Aye.
Any opposed? None opposed. Okay, item 7, another insurance matter, Charlie.
I'm shooting for this one to be shorter than the last 2. This is our renewal of our workers' compensation claims administrative services. Currently, we're using, we're recommending Athens administrators. We have a long history with Athens. They've done an excellent job in working not only with the district, but also our injured employees, which is our primary concern here. We annually have about 30 open claims. Their fees have averaged about $48,000 a year. They have pledged no increase this year, and I believe next year too. So we're asking for a 3-year contract, and if that goes well, we can extend it for another 3 years.
Have we made any progress towards this last man standing issue? You know, that what I'm observing and what we're seeing here, I think, is that operators, or our employees, when they hit the end, it's kind of like the railroad. They file for workman's comp. and it's kind of a complicated problem.
Well, the workers' comp program has been in HR for about the last 5 years. And before that, it was illegal. And I can tell you, at that point, we were not seeing that.
Yeah, but the cumulative trauma now has kicked in from what I can
Well,
tell.
we do get cumulative trauma
Mhm.
claims. It's not necessarily when people are on the verge of retiring. It could be just long-term employees who have repetitive motion claims. I think we do very well in this program, given some of the really tough laboring that goes on in different areas of our business. And Athens does an excellent job working with our people. They really do.
A year ago, I brought the same subject up, and so I think we really need to look at what the long-term liability is, though, not so much the current liability as where this is going, because we have a dozen operators that work for us, and it's giving me trepidation in what's gonna happen. You know, we've had a 0 claim on workman's comp. We just had one that was totally fraudulent. I bitched about it and bitched, and they State Fund paid it anyway. And, you know, and it was like, the injury occurred, he caused himself, he slammed the wall with his hand because he was pissed. And he comes out and we have to pay a workman's comp.
If you're talking about what our reserves are on the comp claims, we have monthly loss runs. We can get that information to you easily.
I'm really talking about the future of where this is going. This CT stuff, from what I can see, and what we've been fighting this claim for 2 years now, and it is a real issue in the water treatment operators, from what I can see. It's getting worse.
Let's see if we can get some information from Athens.
Yeah, and that would relate to your reserve analysis, because we do have a workers' comp reserve,
Sure.
I think, so that would tie into.
What's been your experience with the CT?
I don't do comp.
Oh,
so,
okay.
Just my own experiences, my elbows are hurting right now.
We also do an actuarial study every 2 years, and we're in the process of doing the next one, so we can also.
Yeah, like I said, it just seems to me to be following the train workers situation, where like 80% of them are on long-term disability, something like that. You know, it becomes just part of their retirement is to go after the workers' comp guy for the CT stuff.
Okay. Any other questions, any other discussion, any public comment on this? Okay.
I would like to say one more thing.
Go ahead.
I think you've done a great job, Mary, and the group has done a great job. Understand that I'm
Oh,
very
I know
pleased
that,
with
Larry.
where we are.
No, I hear you, and I'm a little bit at a loss because the liability program is still illegal, but the
Sure.
workers' comp program was transferred over to
Yeah.
Okay.
So I'll move that we authorize the general manager to execute a contract with Athens administrators for a 3-year term with an option for the district to extend that term for an additional 3 years with the pricing described below, which is amazing, because it's the same as it's been for the last 3 years.
Okay, is there a second out there? Okay, okay, all in favor?
Aye.
Any opposed? None opposed. Okay, let's go to item 8. This is the communications outreach and strategy to reduce water demand in PG&E's public safety power shutoff. Hi, Emma.
Hi, good evening. I'm a Detweiler Communications Specialist. So a couple of weeks ago, staff came to the board to talk about the PG&E Public Safety Power Shutoff program. And what a PSPS event is when there's an extremely high risk of fire, say a red flag warning, PG&E may turn off the power for up to 5 days. So because MMWD's tanks are filled by pumps that use electricity, one of these shutoff events will have an impact on our ability to continue routine service. So what staff has done is rented portable generators that will be deployed throughout the distribution system to strategic pump stations. And logistically, what we're trying to do to make this scenario work is ask our customers to limit their water use to indoors only and not use any irrigation. And what we're hoping is that that will reduce demand to a point where our plan will be feasible in moving the generators around to the different tanks to keep water available for firefighting.
Have we looked at it enough to see, are the people in the same power grid as the tanks, the pump stations? I mean, will they lose power too?
Well, so if there's a power outage in any of our service area, we're asking our customers in our entire
All of
service
it,
area.
I see.
Right, so
Okay.
that we're able to reduce demand on
Okay.
the system as a whole.
Because I would think the ones that lose their power, they're gonna lose their control of their irrigation systems too, so
Right.
they should be cut off unless they manually turn them on.
But you understand, it's not all gonna be perfectly aligned.
Of course.
With the distribution and transmission pumping needs with the area that's out of power.
And I think Roger's point is a very interesting one too, that we probably should, down the road, consider some kind of surcharge if we get caught in this situation. I was out of the state this last week, but I understood PG&E kicked in a couple of these PSPS things in the Central Valley, so that it's actually
Part of
happening.
Napa County too, I believe. Right, so right now we're asking for a voluntary reduction in water use. Our customers have been extraordinarily responsive to requests for conservation, so at this time we don't see the need to implement any mandatory cutbacks, but we'll of course be evaluating should a PSPS event happen if our customers are adhering to our request. So how are we going to tell our customers that when this affects any portion of our service area, we're asking our entire service area to limit to indoor use only? We'll be utilizing all of our internal channels, so that includes our website, all of our social media accounts, the customer newsletter that goes to all 60,000 billing customers. And our bill will also include an insert brochure, so we'll be including the message in the newsletter and the brochure. Also all of our e-newsletters. And in addition to all of our internal channels, we will be briefing local media so that they can assist us in getting this information out to our customers. We'll be recording a short video PSA that will be posted on all of these said internal channels, and we'll also be submitting it to Marin TV, and it will run on the local, I think Comcast 26. So we'll be working with the CMCM to get that information out as well.
Do you have any idea what percentage of the customers we reach right now with those techniques?
With all that was listed. So in the survey that Probolsky and Associates did, there were what reached most of our customers is our bill newsletter and our bill insert, and that was the preferred method of communication for 86% of our customers.
But that's not gonna work with something like this.
Yeah, I know, it's just not
Oh, right,
spontaneous.
so there's two communications. What she's talking about is in advance of this occurring, letting them know that we may ask them for this to occur to go to indoor use only. Then there's the communication piece in the event this occurs to let them know.
Right. So in the event, we actually, I've been working with Crystal in the Marin County Office of Emergency Services to set up in advance a process to get them information to then include in their Nixle alerts that go out to the entire county. So we'll be partnering closely with them, and I believe that an EOC at the county would be open should one of these shutoffs occur in the service area. So we have staff that are at the EOC, and so any information will come from the communications department to our staff at the EOC, which would then be implemented and included in anything that goes out to all of the residents in Marin. So that's the real-time notification. But leading up to one of these events happening, we're trying to have a really steady drum roll of a very simple message of, if one of these events happens, indoor use only, whether or not your power is on.
Would it make sense for us to get linked into the telephone system? The one
That's
that's.
Nixle.
Yeah.
That's Nixle.
That's what it is, okay.
Yeah.
So then we'll be called?
So there's two notification systems that the county has, and there's one, Alert Marin, that is kind of like a reverse 911 that can come to landlines or cell phones if they've opted in. And those, using that notification system, the county reserves for situations where there's an imminent threat to life or property. And so our request to reduce water use, if we're still able to deliver water to our customers and there's not a threat to life or property, I don't think that it would be a good fit to put that message out on the reverse phone system.
Right.
But what is a good fit and also is in real time is using it through the Nixle system. So people opt into that, but they have a pretty high opt-in rate for the county as a whole. And it comes to a cell phone where you've opted in with that zip code. So anyone that's opted into Nixle would get the alert from the county, and in the text message you click on a link and there's a short paragraph or two with more information, and our messaging would be included in that, so we would be able to reach the county.
So
in
that's
that
the one
sense.
when you hear all the cell phones go off at the same
Right.
time.
Yeah, right, of
Exactly.
course, cell towers are pretty vulnerable to
Yeah.
going down, so,
They have generators.
some of them, yeah.
So are you looking at doing, basically a mailer in the very near future that says something like, stick this on your refrigerator in the
Right.
event?
Yep, the July, August, bills that are going out.
Great.
So we have, in the insert itself, it has messaging about what we want our customers to do, what we're asking them to do should this event happen, and we're also providing information about how to be prepared in an emergency, any kind of emergency. So we're asking for a 5-day supply of water for every member of your household, with some tips on how to do that, and that your water heater is a good source of potable water, so.
Unless you have a flash heater like we do.
Most.
No, thank you. Yes.
Yeah, so that kind of general preparedness messaging along with what to do should this happen.
Okay, we have some public comment.
I would suggest, maybe if you haven't already done this, a little survey to find out to what extent people are reading the mailers, because some of us, no names mentioned, open all the bills, clean them out, and just pay the bill.
We
So,
actually have some numbers on that.
okay, just wanted to.
So, Emma, you wanna give her, I think it's a fairly high percentage of.
Sure, so about 1.5 years ago, we did a public opinion survey with a professional firm, and we asked where people get their news about MMWD from, and 86% of our customers said that they get their information about MMWD through the newsletter that's inserted into the bill.
But what percentage of the people actually, who open their bill, actually read the newsletter is the question? If that's gonna be a means of
86%.
communication.
The same, yeah, 86.
No, they're saying 86% of them are saying that they get their news that way, but do they even get the news that way?
Well, I think the other point is, we're gonna use all these channels, so we aren't gonna just rely on that one.
Yeah. Well, I mean, I think the report's pretty comprehensive, and I'm glad you mentioned Nixle, that was my note.
Okay.
So,
And do we have any feel, or have we heard anything from PG&E about likelihood? Are they willing to talk about things like that, or?
Likelihood is yes.
100% that.
Condition based, sure.
Yeah.
Spend their money on generators like that.
they're gonna do what they need to do to
Thank you,
protect
Emma.
their liability exposure.
And do we have any feel for how they would shut Marin down? Like, I mean, I've heard them talking about cutting the main trunk lines coming in. I don't know if that's true or not.
Well, just last week, what did they cut off sections of counties, I think.
Yeah, they've identified the tiers for the CPUC for fire risk, and they're overlaying that with their circuits, although some circuits go outside of the boundary of the
Mhm.
tiered threat, so it could be the case that, a larger area would be shut down, but they are trying to adhere to those tier 1, 2, and 3, tier 3 being the highest fire risk.
And do we know what those are here?
Yes, we've gotten all of the meter numbers from PG&E, and we've created maps of what pump stations we think will be shut down.
Thank you, Emma.
Okay, thanks
Great
a lot,
job.
Emma. Okay, so, that was just an informational item, so we'll move on to item 9, which is the grand jury wildfire preparedness response.
Great transition. We're talking about fire now. I did notice on the agenda it said, I think it said this was an approval item. Does it still say that?
Yes.
So I think it's, we're not actually asking for any approval to today,
Okay.
as I'll describe here
Well,
shortly.
unless they think it's perfect tonight.
So that'll be the question.
I think they've ever gotten away without red lines, so I trust in my.
Always a first time.
Yeah.
Take it if you get it.
All right, so I'm Marin Fulton. I'm an associate engineer in facilities and watershed. Tonight I'm actually here to talk to everyone about a civil grand jury report that came out last April. The document actually was about a 40-page document that's actually attached to the agenda tonight. And what it did was it actually evaluated on a county-wide level, essentially what the county's preparedness is for a wildfire event. And so what they did is they really focused on 4 different vulnerability areas. First is vegetation management, which is no surprise to anyone here. We know we spend a lot of money managing our vegetation on the watershed, and that also will extend to off-watershed areas where we have pump stations in the middle of the WUI. Public education, which Emma was just kind of touting, in addition to communicating that there's going to be power shutoffs, there's a real lack of public education on wildfire risk and preparedness. The emergency alert system. So the grand jury report went through the different emergency alert systems that the county has at their disposal. There's actually 5, and they range depending on what the message is and the potential risk. And then there's also the vulnerability area of evacuation. So if there were to be a catastrophic wildfire, how are all these people going to get out of these areas that are essentially trapped? So the report focused on those 4 areas, and what it actually did is this is my first time actually seeing a grand jury report. They issued findings, so they issued 22 findings, and they also issued 15 recommendations, and those recommendations are ways to improve fire preparedness based on their findings. So for example, they found that, they feel that evacuation routes are, insufficient. So some of their recommendations are based on developing evacuation routes, plans, and whatnot. So that's what the document did. As part of that document, they've actually requested that the water district respond to 3 of their recommendations. Those 3 recommendations are in the letter that's attached as attachment 2, and I'll just quickly review them. So recommendation 1 is to create a comprehensive countywide vegetation management plan that includes vegetation along evacuation routes, a campaign to mobilize public participation, and low-income subsidies.
So if I could, the letters, the last 2 or 3 pages in the packet.
Yeah.
And that's what we're now on.
So that was recommendation number 1. So create a comprehensive vegetation management plan. Recommendation number 2 was hire at least 30 new civilian vegetation inspectors and at least 8 fire and fuel crews focused on fuel reduction in high-risk areas of the county, including federal, state, and local public lands, which would include water district lands if those overlapped with those high-risk areas.
Are they talking about countywide?
Countywide. So this would be in cities, county land, unincorporated areas.
And why would it be our responsibility?
They're asking her.
They're generally looked at this independently of jurisdictional boundaries, and they're requiring each jurisdiction that has a piece of the recommendations to respond.
So the hire at least 30 is not by us.
No,
it's
That's
countywide.
correct. And I'll get to where those 30 people are potentially going to go here in a second. And then the third is actually established in the form of a joint powers authority, an umbrella agency for these efforts. So the joint powers authority would essentially be the entity that hires those 30 people that are going to go out and do the work. So those were the 3 recommendations that they asked for our essentially response to.
And are they thinking of that outside of the fire department?
Outside and in coordination with, yeah. So the fire departments would still have their existing staffing levels. This would be a separate entity entirely that would be dedicated to fire preparedness.
Seems like a kind of overdone situation there to me. I mean, if you've got fire people already doing it, I can understand expanding them, but I think bringing in a JPA without overview from the fire department is like
Yeah.
a little crazy.
I mean, I'll say from reading the report, that was one of the reasons that they recommended it. I mean, I don't know if it's a rationale for forming a JPA, but that was their finding, was that county staff and fire districts are essentially understaffed.
Yeah.
That they don't have enough people to go out and visit people's homes and identify if people have actually cleared enough, vegetation around their homes. They don't have the ability to do that. So
So the recommendation is really a force multiplier. Really, it's just,
Right.
yeah.
So, what we really have before you today is, the penal code actually requires that we respond when the grand jury requests to do so. So we have a letter drafted, from our general manager that is going to respond to those recommendations. And so that letter is provided as an attachment to the agenda. And we're really here tonight to get your review and input on that document.
Do you want to know the first part of the letter is correcting facts before we
Yeah.
get to the recommendation?
Yeah. So there's the recommendation component, and then in addition to us responding to those recommendations, there also were some factual kind of inaccuracies in the report. And although they didn't ask us to respond to those, we did, take the opportunity to, clarify some of the existing vegetation management actions that we're doing on the watershed that weren't quite captured.
Good idea. So,
So,
go ahead.
So I was gonna say, so in terms of timing, we actually have 90 days to respond to this from the day that they sent it to us. So we received it as a pre-release report because we were one of the agencies involved. So that actually terminates in July, but we've spoken with the grand jury foreperson, and if we need additional time, we can do that. But the real point is to get the board's approval so that we can kind of put finishing touches on the letter.
How much review has the letter had in-house?
Internally, we think it's ready for board review. I would suggest at this point, what may be worthwhile is for the board, if you'd like an opportunity to review it and get any comments to us, we could make those modifications. If they're substantive, we would bring it back to the board. If it's, relatively minor editorial, we could proceed and finalize this letter. Essentially, in the recommendations, because they're county-wide, we're recommending that we don't jump ahead and speak for the other folks and suggest that the recommendation requires further analysis. And Mary did look at a number of grand jury responses where that was utilized as a statement, but then clarifying and providing context below that response as to the work we're doing and our interests, for example, to continue collaborating or to, implement our BIFA for fuel reduction, but not speak directly on a county-wide effort because we're one agency at this point. So that's kind of the general tone and tenor of our responses.
So you're suggesting that we take this and get responses back to you within some time frame that we can agree on?
Yeah. I think maybe we'll go ahead and send this out specifically with a request
Yes.
date and look at it with the recommendation that if the comments or edits that come back that again are kind of editorial in nature, we would just proceed and submit this if we feel it is
Substantive.
We do want to bring back some requests for the full board to have agreement. So if someone wants to say we're in support of X, Y, or Z, we would bring that back because that would be a policy decision we want the full board.
Could I just make an editorial suggestion? I would let the grand jury know what we did with our last budget with the watershed. As far as increasing the budget, I mean, I just don't think there's been enough public awareness of that.
Good idea.
And I think I think it's a good letter and I really appreciate what you did. But, that needs to be part of the conversation.
I agree.
Absolutely. Okay.
So then we need approval, so we can do this conversation. And any comments we get would be individually back to Ben.
Yeah, you wanna maybe wait a week or something, give us a week? Or-
How about till the retreat?
That's on Monday. We do have more time. The deadline's July 18th, but we could get an extension. So we could pursue a motion tonight of approve of this letter, pending any substantive comments or edits that would be brought back to the board, something like
Yeah.
that.
Do you want to do that, or
Subject
is-
to with the addition. Yeah.
What would the edit is?
or do you want to wait till the next board meeting and
If
bring it up again?
you'd prefer that, I mean,
It's up to you, if you're comfortable waiting. for
yeah, well,
comments.
I'm definitely comfortable waiting, and when we do have time to bring it back, I suspect we aren't gonna get substantive edits, so I'm just
No.
trying
Yeah.
to, give us some judgment on if we need to come back. So
Yeah.
I think a, motion of, if the board's inclined to authorize submission of the letter pending any substantive changes that would come back to the board for another review.
Okay.
Yeah. I'll move what Ben just said.
Well stated, well stated, okay.
Yeah.
Okay, so,
Give it a second.
okay, there's a second, all those in favor of.
Oh, we have a comment, sorry.
Okay, public comment, sorry.
I don't have any comments on the letter per se, but I want to share with you some information that you may not be aware of, or if you are, I'm just underlining it. Jason Weber, in his capacity as the county's fire chief, is moving very quickly on drafting an initiative, which will be a tax initiative of 11 cents per square foot on each house, which will be placed on the ballot for approval next year. It's not clear to me whether the water district is included as one of the participants and one of the beneficiaries of the funding that would be provided. They're looking to raise $21 million a year for a certain period of time, not defined yet, in order to address fire risk. You need to be following that very closely, and you need to be aware of where things stand, and you need to know whether or not the water district is going to be included as one of the beneficiaries of the initiative that would supplement your ability to address fire risk on your watershed. Now, there's another issue associated with this. While they've talked about the front-end charges, they have not talked anything about or said anything about how they're planning to disperse the monies. What will be the priorities? What will be the standards for disbursement? Will it be based on population, based upon areas of fire risk? It's not clear to me at all at this point how the program in fact will operate. And that's something that would also be of major concern to you, whether or not you are one of the beneficiaries of this initiative. So I would suggest that somebody on your staff follow this very closely and report regularly on its status.
Thank you.
This is an important issue, and based on the lack of hearing about it directly, I suspect we are not included, which arguably is in conflict with the recommendation of the grand jury, that even though the funding's a little different, this is a quarter cent versus based on square footage, the grand jury was recommending all the town's fire departments and land managers be part of a county-wide funding initiative. So we will be talking directly to Jason, understanding what he's doing and the basis and how it may differ from this, and we'll bring that back to you.
The grand jury was proposing a sales tax, and they got pushback from all of the local jurisdictions who require and need to have capacity, and in some cases don't have much additional capacity for sales tax initiatives on their own, and they don't want to be capped out. So they're shifting this to a property tax approach.
Do you know if the quarter cent is a number of that magnitude, 21 million?
No, it was more like 15.
But it's in the order.
Yeah.
In the ballpark.
But they got a lot of pushback from the cities saying, look, don't take away our sales tax capacity. So they're shifting this to a property charge, and they sent out a survey, of which I was a recipient, of 11 cents per square foot as a way of trying to have some equitable distribution of sourcing of funds. Thank you.
Do you know if the quarter cent, Roger, had a budget attached to it?
I don't know. I can't answer that question.
Maybe we could question back to the grand jury about that, because I'd like to know the basis of the quarter cent. You know, was it rational, or was it just picked out of the air that as a number they could sell, which
Well,
they couldn't sell?
most of the municipalities are at their limit on sales tax. So that may be why it's a quarter cent, but we should be talking to him about that drafting of that initiative to see whether we can have some influence. Yeah, absolutely.
Can I just make a short clarification when Ben was mentioning, you know, whether something was subsidized or not? Essentially, the response that we've drafted here basically says that each of their recommendations that they wanted us to respond to require further analysis. Like, that's the MMWD's official response, is that these recommendations require further analysis. To the extent that you might have some editorial comments in the letter as far as language, we can, you know, incorporate those as far as the motion to approve. But unless you want to change that response, which is that these recommendations require further analysis, I don't think we necessarily would need to bring it back to the board unless it was something significant.
We'll see, based on the motion, what the comments come back and make that decision accordingly.
Yeah, but I understand what you just said.
Yeah.
That's what you're saying is, this needs a lot more work.
Yeah.
Yeah.
Okay.
Thank you.
Well, this may bear on this letter, though. I mean, we might want to put something in there that we support the approach that's being proposed by the fire department, the property tax approach. Once we figure out how the numbers were arrived, you know, the problem I'm having here is 15 million enough? Is 21 million enough? You know, I don't even have a feel for what they're talking about. But what I could see, especially at the interface properties, which we have 2,000, as I recall, something like that.
25,000 miles.
No, but the actual interface, I saw some MMWD thing.
Wildland urban interface.
It was like 2,000 homes. Those, you know, it seems to me we should be looking for some funding help to help them, you know, to clean up that interface, because that's where the action's gonna be, right? And as far as the people getting out of Mill Valley, good luck. You know, Mill Valley to me is an exact repeat of Oakland, and they're not gonna be able to get out. The fire trucks can't get up, and the people can't get out. In certain parts of Mill Valley, they're just stuck.
So I think I heard a motion.
You did, and there was a second.
Okay, so the motion is to approve the letter with the editorial changes noted, but giving us some time to comment.
Right, and giving staff discretion in terms of if there's additional editorial comments, we'll proceed and submit it. If it's substantive, and that's an example of one kind of substantive issue. Director Russell has raised another really interesting one. After we talked to Jason, were we not to be part of what they're developing, we may want to note in our letter to the grand jury that it's going in a direction inconsistent with the recommendation from the grand jury, not bringing in, for example, all the land managers into the coalition. So I think we have a little work to do. We do have time, but we would benefit. We'll send out a separate document and request so the board can do red lines and that sort of stuff if you have comments on this.
And it seems to me that, you know, if we're really getting into this, you know, I have no idea what the number would be, but let's just say it's $50 million. If we were given unlimited budget in the watershed, what would we do differently than we're doing now? And, you know, I think that discussion needs to be had, at least internally, to say that if we threw another $10 million a year from the county at the watershed, what would we get out of it? Where would you direct the money? And I know there's some discussions we've had that we're sort of at what we can spend. You know, at least that's been kicked back at me in asking a similar question, that more money wouldn't really help us necessarily because they're at the limit of what they can apply labor-wise. That's what I remember from an answer. I might be wrong about that, but that's what I remember.
Well, yes, if we could spend some of that additional money on staffing, then yes,
Staffing,
we
that's
could
what I'm
ramp,
talking
we
about,
could
yeah.
ramp up.
You know, or hiring the guys that do the weed control on the watershed, right? Or the goats, or whoever. You know, it seems to me that I'm kind of shocked, very frankly, that they haven't talked to us, you know, to set this budget, the 11 cents a square foot. You know, again, it may be that's what they think they can sell, and it may not have anything to do with what the actual needs are.
But I think it's also important to ask of the fire chiefs what the fire patterns could look like in Marin County, because their friends are here from Alliant, and if you look at the aerial photos of Paradise, what you actually see are large segments of forest that are fine, and you see whole blocks of houses that are gone. Right, I mean, I'm just pointing out that it's a weird, it's not an intuitive combination of a fire footprint in an area like that. And so I think asking what you're asking and saying, what is the annual budget that's needed to address this and describe it in that sort of a, you know, framework. Because it's, and actually, I mean, I work at UC Merced with a guy named Leroy Westerly, and he is one of the top fire experts in the West, you know, and so we could connect him with Leroy. I'm serious. I mean, there's.
He should be connected with Leroy. I mean,
Yeah.
at the last, what I read in the paper, the last budget hearing for the county of Marin, you had firefighter union officials lobbying to double the fire staffs.
Right.
So, you know, what are you getting for this money? You know, who's benefiting? You know, I don't have anything against fire departments, but I'm just saying, you know, that does need to be considered. Who benefits? Where's the money gonna go? What's the strategy? So.
And the other thing I think that's important, especially after the struggles we've had with the CMF, is, you know, what do you think the average home is? 2,500 square feet, 2,000, 3,000,
That's
25?
a hefty tax.
Yeah, it's $250 or more.
Yeah.
You know, just Cabango, and you know, it's going to be especially for Prop 13 property taxpayers who aren't paying their share, like me. That you know, it's even a bigger hit, percentage-wise.
Yeah.
Okay.
Good job.
All right, thanks.
So.
Thanks, Eric.
Did you got direction?
We need a motion in a second.
We got a motion in a second, yeah.
Do we have a motion in a second?
You got a motion second?
Okay, all those in favor?
Aye.
Any opposed? None opposed.